Hey everybody, welcome to Trading Capital. I'm your head market analyst, Curtis Scouten, kicking off the Monday session. It was a pretty phenomenal session for TC members. We banked many profits today, and it's always a great trading week when you can start off with banking 4 winners right out of the gate. So we closed our Mosaic short, we closed our OKE, our Alcoa short, and then not only did we close our Alcoa short on Friday, we also just went long today and pretty much picked the near lows for a beautiful day trade, netting over 7%, which we'll go over. And then we also did a little bit of adding to our core position in Netflix. So touching on Mosaic, one of the reasons I decided to close my short on Mosaic is it was down roughly over 6-7% on the day. And we shorted up here at 74.12, our average, and we closed it here at 63.17. So it's roughly a 15% gain on our short. Anytime you get into that 10 to 20% range on a position, myself as a swing trader and a day trader, I have to start looking to bank profits because it certainly narrows down the risk to reward ratio when you're deep in the money 10 to 20%. On a swing trade. So you always have to know that taking profits is never a bad thing. Even if you miss out on a few extra pennies or dollars, taking profits and netting a score of 15% is awesome. So here you can see we covered our short at this yellow line here, and the price action actually reversed and closed above our short. So that's the beautiful thing about shorting it, is that when you often cover it into key technical levels, and the reason we covered it is because you broke this pivot high, and then you're basically into all of these pivot tops here as support, and you had this 1, 2, 3, 4 day surge to a low with an exhaustion gap. It looked like an exhaustion gap to me. That's why I wanted to bank this profit and put it in our pocket and start looking for more trade executions. And the funny thing is that you also approach the 50-day moving average. So since Mosaic, which specializes in fertilizer and has been a powerhouse with what's the tensions going on in Russia and Ukraine, it was whenever a stock has such high momentum to the upside, which Mosaic has, you can see on the daily basis, the stock has basically gone parabolic. It's had a terrific run right from the lows. But whenever a stock goes parabolic like this, often when it falls into support, it has a massive bounce. So I could potentially see this stock coming all the way up to here, this pivot top here, which would fill this technical gap, and then it would also start to make potentially a head and shoulders. Now, you never want to guess and front run a pattern. However, you kind of always want to look and think a couple steps ahead. What type of pattern could this make if it gets a bounce? And you could clearly have this little bit of a head and shoulders topping pattern if the price action started to bounce from here and came all the way up here and then started to roll over again. So if the price action gets back up to this pivot high, we will look to start another short on Mosaic. I do believe you have a top on Mosaic. I think this is the top. And ultimately, even if it does go higher than that, there is a gap fill that is from the 2008 cycle up around this $85 mark. So I'm very comfortable with starting another short position at this level and then adding if it somehow breaches the all-time high here and starts trending a little bit higher. But on a weekly basis, let's just see if we have any signals. That's a nasty weekly reversal candle. Again, typically patterns do retrace, so be ready for a potential rinse and repeat opportunity, as this could potentially come and form a right shoulder. OKE, we netted just over 10% on that trade, and we only took this about 3 days ago, which is the beautiful thing. So we shorted it, as you can see, into clear long-term resistance, this yellow trend line, and then it just collapsed from there on in. The reason why we covered our short today was this technical gap here. Again, you can clearly see the major bounce it had off of that technical zone. Again, there is a technical gap here that looks like it should come to be filled. I don't think I'm going to re-short this one. if it starts trending up a little bit higher. If for some reason it does take out its all-time high here, then I will look to re-enter a short position on OKE. Alcoa, beautiful, beautiful action. So not only did we profit tremendously on the downside action, but we also just today did an amazing swing trade. And I started it off as a swing trade because it was into such oversold levels, into great technical support. You can see I issued the alert here via the trading chat at 63. For those of you that were able to execute it, you could have even got a little bit of a lower price. I had my secondary buy level here at 62.16. So I was actually day trading this and swing trading this. So sometimes when stocks align perfectly into support levels, often if they're oversold enough, I can execute them as a day trade and a swing trade. So that's exactly what I did. I started day trading it, and it turned out that it was a phenomenal level to buy Alcoa at. And Alcoa had this massive collapse, from the high here in March all the way down to here in April. Specifically over the last 3 sessions, you've had this gap down, huge sell-off, which is where we covered our short, and then you had continued selling. So you kind of had this gap down 3-bar surge to a low, and then you had this amazing reversal. Just looking at the intraday price action, we picked it up down here, right on the turn, and I basically covered this position just at this gap fill here. Now my intentions were, and I did put out an alert in the chat, to basically cover it at 69.50, which would just be below this channel, which would be the top of this channel, just below that, and it intersects with this pivot high. So, but I wanted to just bank my profits, 7% on a swing trade in literally 5 hours is just tremendous, and I would happily take 7% in a trade over a few hours any day of the week. Looking at Netflix came into support today. It was under pressure all day. It was down roughly 4% on the day at one point at the lows. But notice how you had this low here and this low here. You've kind of made your double bottom. It was good to see that you didn't take out this impulse move to the upside, but you came down to double test it, and you've bounced off of that, which is beautiful because you're right into support. This orange trend line on the daily basis goes back to a double top, a major pivot point from several years ago. But we added at 205.51 to our Netflix position, and it's great to see that it bounces off of this technical level. And now it looks to be that it's putting in a small intraday bull flag pattern. So it's still an immature pattern. It needs time to develop. But the beautiful thing about Netflix is that today was pretty much the last day for the margin call. Typically when a stock tanks and people are in margin and they need to top up their margin account, typically when the stock tanked, which was roughly, how many days ago? Was it 3 or 4 days ago? So yeah, you had your big sell-off, and then 1, 2, 3. So 4 days ago, the stock really tanked. And it's typically the window for margin requirements is 3 to 5 trading days. So today's being the 4th trading day, I would assume that most of the margin requirements are done. So the forced liquidation and selling, in my opinion, is mostly complete now. Now this is where I think you can start to see Netflix start to build some momentum and a base to snap back. And many people would think that this is actually bearish consolidation. But the beautiful thing about this pattern is that it's a downsloping trend line. So most patterns, whenever they have a flag pattern with a downsloping consolidation, the pattern tends to break upwards. Versus if we were looking at the Bitcoin chart, you have an upsloping parallel channel inside of a bear flag pattern. And typically the upsloping channels break down, whereas the downsloping channels break up. So it's very counterintuitive. Most people will look at this and see, oh, Netflix is trending down, therefore it's going to break lower. Now, it's never a guarantee, technical analysis, but you want to put the probabilities in your favor. And certainly if you looked at 1,000 charts of downsloping parallel channels, you would see that most downsloping channels actually break up. So this does support the thesis that you're into major oversold territories. I personally still don't think the miss on earnings, even if they lose 2 million subscribers, which they haven't yet. It's just a forecast, and forecasts can always be wrong. So even if they do lose that, it doesn't constitute roughly a 50 billion wipe off of their valuation. So they're still consistently producing revenue. Yeah, sure, maybe they're not going to be growing as fast as they once were, but I think that they could still be a tremendous growth opportunity, especially when they implement that new patch that they're supposed to be limiting multi-household uses on one account. So even if they, have 100 million households that aren't paying for a membership but are using Netflix, simply catching 2%, 5%, 10%, 20% of those people. Imagine if they caught 20% of those people. That would be an extra 20 million subscribers, which would take them to 244 million. It would completely blow away the 2 million that they're forecasting to lose. So just keep that in mind. Netflix is still a staple. It's still a very, very small purchase amount, roughly $9.99 or $10.99. I might be off by $1 or $2 on my latest Netflix price, but it's a very low subscription fee that often people, even if people don't watch Netflix, they just forget about the charge and they don't even cancel the membership. And that's the thing about these low subscription based business models and revenue streams, is that people often forget the micro purchases that come out of their bank account. So that's why I still like Netflix, and we're still accumulating down at these levels. We're slightly out of the money on Netflix, but ultimately I think Netflix can have a snapback if the markets get a bid. Even if they don't get a bid, I don't think Netflix is going to go much lower. I personally see Netflix snapping back to the COVID low here, so around the 289 level. And if that does happen, that would imply from current levels a 38% rally. So that's totally within the cards. If you measure the last collapse that Netflix had, which was here on earnings, it roughly took 3 weeks for Netflix to start snapping back, and then another, 1, 2, 3, 4, 5, 6, 7 days here. But roughly in 7 days, when you put in this bottoming tail, Netflix rallied 30%. That's a tremendous move. So when you factor that Netflix rallied 30% from, this 350 level, it can absolutely rally 38% from an even lower level to really test this COVID low. So that's the thing that amazes me, is that we've broken 3 major pivots here: the COVID low, the October 2019 low, and the December 2018 low. In reality, yes, the pandemic is slowing down, but have people really canceled their subscription bases? I don't think so. Yes, the summer's here. People are going to be spending less time indoors, more time outdoors. But that subscription is just on auto renew. It keeps on giving. And that's the thing I like about Netflix is, you keep hearing this bearish sentiment that Netflix is dead in the water. It's going blockbuster style. I certainly don't see that at all. I don't even think that's plausible with the content, the celebrities, and the overall foothold they have in the streaming business. So I am confident about accumulating Netflix here. The fact that you can buy Netflix at these levels, and you haven't had an opportunity in over 3 years to buy Netflix at these levels, I'm salivating. And it's only a matter of time before it does start to pop up out of its oversold territories and really starts to make a run to net us some good quality profits. Okay. Anything else we can touch on here? I'm just going to scroll through my chat to see if there's anything else that I should be touching on. Let's take a look at, just give me 1 second here. PayPal, we'll take a look at PayPal. Let's take a look at PayPal, shall we? What is the ticker there? PYPL, I think. PYPL. Whoops. Of course, I entered in twice. Okay, so PayPal responding well. This is exactly what we want to see. So in my previous video, we drew in this trend line, this downsloping trend line, which would clearly act as support. And we picked up PayPal on Friday at this green line here around the 86.66, and it did go a little bit lower. We could have bought exactly on the trend line, but it just shows you how powerful TA is. I just want to make that a little more accurate, pivot low to pivot low, and look at how you've had this momentum push off of this downsloping trend line. So that's the beautiful thing, is that PayPal was oversold. You again had these, there's so many charts like this. This 3-bar surge to a low is a classic oversold condition in a quality name, and you can easily play it for a bounce. So now the question is, how high is PayPal going to go? Well, ultimately, I think this is going to be the channel that you can watch. It's kind of this wedge formation that I think PayPal is going to start bouncing up, into it and then out, into it and then out, and then ultimately I think you break upwards at some point in time. But they have earnings, so we just have to keep that in mind. Anything can happen on earnings. That's why we've only have a 1% position, but I just can't give up buying PayPal at clear major technical levels into oversold conditions. And I've stressed this before in previous videos, I love buying quality tech names, beaten down tech names, as they sell off before earnings, because it lowers that expectation of the company having to actually report strong earnings. And even if they miss or even if they hit, the company has already sold off, so the likelihood of it going much lower is certainly less of a risk that it does go lower. So where do I think PayPal can pop to in the short term? If PayPal catches a bid and has strong earnings, I could see PayPal popping up to this gap fill here. We would probably look to take profits at that level if it caught a bid. So this technical gap fill area would be a nice 22.81% from our current entry, and that's certainly plausible to do that. Could PayPal go here lower? I think so, to this 82.55. It certainly could come test this COVID low. The beautiful thing is that with earnings, even if you miss, you are into clear technical support. So obviously this major pivot COVID low will be technical support. If for some reason you severely miss on earnings, PayPal, and PayPal has a really strong track record of reporting strong earnings. I mean, they've missed 2 of their last, several earnings. So I think PayPal into support is going to surprise the market. There's still so much bearish sentiment on PayPal. If for some reason PayPal breaks this COVID low, I'll be looking to add in and around here at the $79 level. And then if for some reason it goes lower than that, then I will be looking to do these pivot lows. Just give me a second. Volume over there. You have some more support there. And then your final add level that I would be adding is this technical gap fill down there. So those are really your key points. I mean, ultimately, this implies that there could be roughly 22% more downside. That's why we accumulate a small position. We start off with a small position in the event that it does go lower. But I find it's going to be very difficult, in my opinion, for PayPal to not get a bounce before it starts testing these technical levels. I would be very surprised if it goes in a straight shot all the way down to the 67 or 72 levels, since you are into a major trend line of support over here, as well as a major support zone in and amongst all this chop back from 2018, early 2018, 2019, 2020, etc. So huge technical levels on PayPal. And we're starting to accumulate a lot of these beaten down names like STNE, SoFi, and the likes of those. Let's just take a look at STNE. So Stoneco, again, we bought in at this technical gap fill here around the 959. You can see we're slightly in the money around 969 now. It had a good push. It finished up 4.42% on the day. Can it go lower to test this downsloping trend line? It absolutely can, or this double bottom zone. It certainly could go down there. I'm not going to say that it can't, but the fact that it's 91% or basically 90% down from its highs, it stands to suggest that this thing is way too oversold, and that the risk to reward ratio, when a stock is down 91% from the highs, is there really much more risk to the downside? Sure, it could still be sliced in half and then another half and so on and so forth. But when a company still has a strong balance sheet, is still, producing revenue and profits, I find it very unlikely that it's going to go significantly lower than its current levels. And I still see this massive volume bar, 70 million in shares changed hands during this gap up. So now that you've filled this technical gap, all the people that caught this initial gap up have sold, and now it looks like you're with an increased volume candle today of 9.3 million shares. It actually negates the 3 previous volume candles from these 3 sell-off days. So that's a little nuance to keep in mind, that you've clearly now had an increase in volume in the buying pressure, and it should hold in terms of this being a bottom. I don't think you're going to take out these pivot lows here, just due to the fact of how large this volume spike was to the upside. Another one we can look at, let's see, SoFi. We'll take a quick look at SoFi since it is a position of ours. SoFi, again, I love these downsloping channels into new lows. You don't really have any resistance points to compare it to, but that's where you look to previous cycles. What happened. So you have 1, 2, 3, 4, 5 bounce cycles. Again, roughly the sell-off was 30 to 35%. You're now from the 50-day moving average. If I throw the 50-day moving average onto this chart and we measure how far it is, at the lows it was down 34%, had a nice pop today, so it's roughly 30% from the 50-day moving average. You can see you're hitting this middle point of the channel, which also happened to be a new low. I'm not quite convinced that SoFi has put in a bottom yet. It is oversold. So it could certainly catch a bounce if tech produces strong earnings. Its earnings report is only farther into May, so it's still a few weeks away. What I see for SoFi is I could see it be getting a lift, a quick rally before earnings. We would look to take our profits. Where I'm looking to take profits is just depending on how the price action is. If it surges right into it, or if it has bullish consolidation into it. It really depends on how fast and what type of pattern it forms getting into key levels. But anywhere on this gap fill here, this gap fill here, or the top of this parallel channel would be a good sell point. Okay, I think that's pretty much all the positions I'm going to go over today. Tomorrow really kicks off a big week, so stay tuned for alerts. Don't try to front run trades into earnings. Unless you're into major technical support for quality names, start inching in, accumulating positions, but it's going to be a wild session. How I like to play earnings is if a stock pops tremendously, I'll short it. If a stock drops tremendously, I will buy it. Okay, I don't try to front run it, I just let it play out. And it's very difficult to say catch a falling knife. That's where you have to run some quick valuation metrics based off of the earnings to see where they're going. But usually you don't even have to really isolate the fundamental valuations. If you have great technical support areas picked out on your charts, lined up ahead of time, it often lines up with the fundamental valuations, which just blows my mind that how powerful TA and the candle formations are. And at the end of the day, all it is human emotions. There's fear and there's greed. Fear is selling, greed is buying, and those are the two constant emotions that will always be present in the stock market. And that's why technical analysis is basically the psychology of humans buying and selling stock. Okay, so again, we're slightly out of the money on SoFi. I was getting close to add. My next add level is around the $6 mark. If it goes a little bit lower, then I'll go around the $5.33 mark. Now, since SoFi has had a bounce off of this level, I may lower and adjust this next entry point just a little bit, just a touch, but we'll have to see how the price action gets in and down there if it does fall down there. So stay tuned for more updates. I'm going to be manning the alerts this whole week, basically every second of the day until the markets close. and it certainly could be wild. You may receive some alerts in the after hours and in the pre-market hours, just depending. There's some companies that report earnings in the pre-market, and then there's some companies that report earnings in the post-market. So again, if you are trading, be ready for either alerts before the market opens, so between the 8:30 to 9 a.m. time frame, and then anything after the 4 to 5 time frame. Okay, but it'll be very, very interesting, and I'm super excited to see how the